Alright guys, here's the recap for today. Today is October 4th, 2018. Um, so first thing in the morning, pre-market, we went over some things we were looking at. The first thing that caught my eye was Tesla. If you look here, let's see. If you look here on the daily, I mean, it had huge, it had huge support right here. Let's go ahead. Huge support here at these lows on this day here. We can make it bigger. Had huge support on this day here. And look, it didn't have any support all the way down to this area. And funny, it came down to that area and touched it perfectly. That was the first support it had. It had this huge gap to fill. And you could maybe say this was the gap it had to fill. Some people might go by that first, but obviously technically this is the gap, but maybe it could have a little support here. But it came down and touched that. So that's what we were looking at pre-market. And first things first, out the gate, SPY. Let's go to pull up SPY. SPY was weak. So anytime you're trading these high beta FANG stocks, you always want to keep an eye on SPY, guys. That's the first thing. I have 4 monitors, so I have SPY up on another screen, but also if you have one monitor, you can keep a quick chart up right here like I do. I keep it as a line chart just so I can just see the overall trend. I don't need to see candlesticks because I'm not trading it or anything like that, though I would have it on candlesticks I do have it on candlesticks on my other chart. This is just for trend, and I have the VWAP just so I know if it's under or over. So first things first, we were definitely looking for this short because obviously Tesla's had some bad news over the last few days. It's been coming down, and today it had major support with a major gap to fill. And it's been trying to close that gap. So right off the gate, it started to sell off, and I knew this was major support. Major support. So I was looking at the 290 puts, which were about right here. 1 or 2 strikes out of the money. It was like 1 strike out of the money, And instantly the stock started to sell off. I got in literally before the crack because when I saw that SPY was coming down, and all the other stocks, if you look up Amazon and all the other tech names that follow the SPY and kind of lead this sector, and they usually typically 90% of the time follow the same direction. So what you want to do is, first things first, is if you're going to be trading a name like Tesla, you obviously want to have the SPY up, and it also helps to have Amazon, Facebook, Apple, Nvidia, Baba, Baidu, Google, that's Netflix, Nvidia. You want to have all those up because those stocks tend to usually kind of run in the same manner. If normally, if they're all running, if a lot of them are running, they'll kind of all be running, and they're not always going to run and tank at the same rate. Some might be weaker than others, but they kind of tend to do the same thing. They're part of the same sector, tech sector, high beta FANG stocks, kind of in that sector. So if you pull up any, Amazon, all the stocks tanked today, as you know. So when I have all my charts up of those stocks, I keep a chart up of every one of those stocks. So I want to keep an eye on all of those if I'm trading something like this. So instantly I see SPY is coming down. That's the first thing I want to look at. And this is coming down. It has major support. Also, all the other names are coming down. So it's off the gate. It's a weak market, and the whole sector is weak. The whole tech sector, high beta, FANG stock sector is weak, and the Qs and the SPY are weak. So that right there is 3 checks that you want to look for. Plus, this has strong support. So I was looking for it to break this because I knew once it broke this, it had a huge gap to fill. So I got in at the break I got in right here at the break. Kind of popped up a little bit. Wasn't down much, you know. I probably would have stopped up here at the break of pre-market highs. And sure enough, as soon as it broke, and it went for the races. It broke, kind of had a little relief bounce here because, you know, these candles don't look that big right here, but in the morning time, before all this was here, it came, this candle right here came down to like here, you know, if you were looking at it with all of this. You know, as the day goes on and the stock starts to tank more, they have to make these candles smaller to fit all of this. So it makes this few candles not look like as big a move as it really was, because this was a huge move. So it broke that support, came back up, tested the VWAP at 920 EMA, and it just instantly started to tank. You know, and if you were a little nervous to take it right here and you wanted it to prove itself, you could have waited. It came back up, tested, came down, came back up, tested again at 9 EMA. And then that's whenever you kind of get your bear flag. You can kind of start to see a formation starting to set up now, you know. Then you could have got in there. So the 290 puts were at like 350 right here when I got in. And I think they hit a high of like, they hit a high of like $10 or 11.50, I think. You know, they went up like 200, 150, 200%, I think. I don't know what it was, but they definitely almost hit 200%, I think. Crazy move. And you definitely want to sell into these pushes. You never, you know, the stock's not always going to go straight down like this. You know, sometimes it could have went down to right here. You didn't take your profits. It popped back up here. It stopped you out. Then came down some more, chopped around. So it just kind of depends. But out of all days, if a day was a day that you wanted to hold, this would have been it, since every other stock in the sector and the high beta stocks were all tanking with SPY in the queues. So just amazing trade. Congratulations to everybody who saw it. And if you miss like this, you could have got in here. And then the next thing is, you always want to look for, you know, you never want to get in when a stock's just take it on these big red candles. You want to wait till they kind of pop back up, consolidate a little bit, and then make these little smaller bear flags. You know, this can be considered a bear flag right here. It's a smaller one, but it kind of consolidated, popped up a little bit, made a little bit of support, then broke it. You know, it comes back up, support turns to resistance, comes back up, hits that resistance, support, comes back down. What does it do? Comes back down, makes a little support here, pops up. And, you know, these are all places where you can get in. You know, same thing here. What does it do? Makes some support here. You have another line here of support. You can get in on the break. You just have to be careful the further it goes down, because obviously, you know, you don't know how far it's going to go. But this is a good, I pretty much said I think it's going to close the gap. You know, I traded it out the gate and I got out very quick for some quick profits, and I didn't get back in. But the reason is for that is because I had a good week and a good last week. And, you know, the more you work on your patience, the more you'll be glad to be able to say you can sit through trades, even though they're good setups. You can sit through them, or even though they're moving, you know, you can sit through the ones that are moving that aren't good setups, and the ones that do have good setups, you can sit through them. It's kind of like you have control over your emotions, and it makes you happy to know, like, you know what, I don't need to be in everything. I'm up some money, you know, I don't want to give back profits. I'm going to just be cool. So that's a good thing, guys. You know, when you can do that, it'll really make you feel good about your trading and be a lot more confident. So then you had, let's see, Amazon. So Amazon, let's see, where was it called out at? Let me check that out. Where Rock called Amazon out at. Okay, so Amazon was called out right here. Now, You guys who have been with us, and are starting to learn this, where do you think it was called out at? Without me even saying, where would you say it was probably called out at? And same thing with Amazon, downtrend on the daily. It broke the 20 EMA. Broke the 20 EMA, and it kind of looks like it was going to probably want to touch that 50 EMA. You can come here on the hourly. Same thing. It had strong, it made some strong support here and in this area. These yesterday's lows kind of, popped up to touch that and instantly rejected that area and came back down. But if you look on this, sure, you could say you could take it under pre-market lows, and you could. But we talked about taking trades right at the open because they can whipsaw you. As fast as it came down, it can spike back up. So you wait for a setup. What was the setup on this? Well, I hope you guys can spot it. Look, came down, made some support, popped back up, comes down to break support. Perfect bear flag. As it broke that support, that was your entry. Another great trade. You could have played, that was at 1930 or, around 1930. You could have played the 1920 puts, anything in that range you could have played. You could have even played at the money. We didn't necessarily know that it was going to go this far, but it did. And so you could sell into, so on just trades like this, you obviously sell into this push. But look, if you miss that, you also get more entries. You wait for setups. You don't chase the stock down. If you miss the entry, I'm going to keep saying this. If you miss the entry right here, you miss it, it starts to go down. Don't chase it right here. Don't chase it as it going down and get FOMO, because what happens as soon as you get in, it pops back up. And then you get scared. You think it's going to run. Maybe you took too much size and stops you. Wait till it creates another setup. It will. And if it doesn't, another stock will. There's always going to be more trades during the day. You don't have to worry and get FOMO that you're missing a trade just because other people in the chat room are trading it and making money. And say, oh, crap, I missed it. No. Doesn't matter. So that was another great trade. As you can see, on the hourly, it's bearish. You can see the EMAs, red cloud, in a downtrend. Broke the 200 in SMA on the 1 hour chart. So totally in a downtrend. Very bearish looking chart. And usually when it breaks, usually Amazon, stocks are known, especially like Amazon, it's known when it goes on these 4-day runs, it'll have a pullback. And once it breaks those EMAs and stuff, it comes down, touch the 50 EMA. So that was another great trade. And then again, I'm going to start doing these recaps every day. And they're not going to be super in-depth like our one-on-one webinar that we do once a month and the question and answers that we do, every weekend. These are just going to be quick, go over the trade. If you missed the trades, just to show exactly what we saw. Because I know sometimes during the market, things can move kind of fast, and even though we're on screen share calling stuff out, sometimes there's more than a couple trades, and maybe you miss why we wanted to get in this trade, and you don't see why we took it in the first place, and you want to know those things for next time when you see something, right? Maybe you want to, because the goal is for y'all to become a self-sufficient trader, So that's definitely the goal. And you just have to be careful with your time decay, guys. If you're new to options, on a Thursday, trade next week's expiration, I mean, because these options, on a Thursday, the way, like, let's pull up a 19, what did we get at 1930? Let's pull up a 1920 option on Amazon. 1920 put. And those of you at TOS, you can right click the option, and I suggest all of you who are new with options and trying to get a feel for how they move, this is how you pull up a chart. And it'll pull it up to right here, and you can link it to this. That way you can get it right here. So this is what I used to do when I was new to options. I did this every day, Monday through Friday. I would pull up the weekly chart option, and I would see how they move differently on each day. Now notice if right here, let's say if you got in, let's say let's look at all right, so let's see if I can find something. 833 right here. So if you come to this candle right here at 833, look, this candle is 833. It started right here, right? This is where this candle started at 833. The price is above this pullback, right, where this candle started. So if you come to this at 833 right here, the price, the pullback, it went under. So you're wondering, why did the pullback not come back and it didn't go above this, but yet the price of the option went further down? Simply because time decay. You know, if it was a Monday, it probably would have stopped kind of more in line to this. Or if it was a week or two out, it would have been more in line with what the stock was doing. And on Fridays, it gets even worse, especially when on Fridays and Thursdays, when you get consolidation periods. I mean, you can be up nice in a small little candle. You know, you're up 16.21 right here. And next thing you know, it pulls back $6, you know, or $5, just because, you know, it had a little pullback. You know, you come here to 10 o'clock and it does this and it pulls back $4. You know, it almost comes back way into this area, and look how far the stock is down, but yet the option pulls back, you know, almost halfway to where it opened at, you know, but it only came back like an eighth of where it opened at, but it comes back almost halfway in between here and here, close to, you know, halfway would have been right there, so it comes back close to a halfway. So that's just how time decay works. But that was the Amazon call. Like I said, I'm not going to go in super detail. I'm just kind of going over what we saw. Obviously, it's in a downtrend. You had the crossover right here. It's under the VWAP, under the 50. Downtrend on the daily. Market was weak. You know, very good trade. Good bear flag setup. One of my favorite trades. So then you had Baba. Here was a good trade. So it was holding it was holding kind of came down and it was holding that level for a good amount of time. You know, it couldn't break, but look what that is. It had resistance support right there. So that's kind of what we saw. We saw it came down, and as it started holding this level, I already had this line up on my chart, because first thing I do is when I look at a trade is I look at the hourly chart. So when the stock starts coming down, the first thing I want to do is mark out my lines. And the first thing I do is see, okay, it has support here. I mark that support on the chart. And what does it do? It comes directly to that line and it holds it. So when you see that, you either think, okay, it's going to bounce and run off of this and rip, or it's going to bounce, hold it, make some support, maybe bounce up, maybe not, maybe consolidate and break it. Well, considering the market was red, all that sector was red, we were looking for a short. Sure enough, as soon as it came back, it pops up, it touches the VWAP, the 20 EMA, holds that. Perfect textbook trade, pops right back into the EMAs and the VWAP, and starts to sell off again. You get in right here on the break of that, and bam, you get a trade. And once again, what do you see? Nice little bear flag, descending triangle, wedge, whatever you want to call it. You know, another great trade. Then, it comes down, hits a support level, makes its own support. Sometimes, okay, so when I say hits a support level, sometimes it doesn't have to be a support level on a chart. That just means that's where it stopped at, and it kind of created its own support. So then you're looking for it to break that again, because usually when it pops back up, it'll see how it kind of hit that and hung around that level for a little bit before it broke it. So that was another good entry. That could have been another good entry for you right there. These are the things you want to look for, guys. I know a lot of people are wondering, what are the setups and how do you recognize the patterns? They're simple, guys. All you're doing is you're waiting on stuff to form resistance and support, because when they form those supports, once they break through with force, because you have millions of other traders around the world doing the same thing I'm doing. They're looking at these charts, they're seeing it created a support, and they're waiting for it to break. Same thing here. Millions of traders are trading this way. So therefore, when they break through support, they break through with force. So this is what you look for. I know a lot of new traders, their main thing is they don't understand when a good trade is presentable. And a lot of these rooms don't teach them. And this is it. It's simple stuff like this. It's not super rocket science, And does it always work? No. Sometimes you could get in here, it breaks, and then it breaks just a little bit like Facebook did the other day. It pops back up. And that's okay. You stop out. If you manage, it's all about probabilities. You manage your risk, and when you get winners, you manage them as well as you can, and they will pay for the losers and more. That's why it's so bad to get greedy and get hard-headed and hold the loser. You will feel so much better if you cut it quick, get rid of it. Even if it turns around and goes your way, it's okay, because the next trade, you believe this is where believing in your system comes. If you believe in your system, I believe in my system, and when I see these setups, I trade them. And even if it happens, I have a really good percent win rate. But even if, let's just say that I was trading my perfect setups like this, these bear flags and stuff like that. Well, let's just say I took 4 or 5 losing trades in a row, which is rare. But let's just say that happened. I still am going to trade these trades, because I know I just caught a very unlucky streak. And that's all it was. But I still believe in my system, and I'm still going to trade these setups, because I know over time they're going to work in my favor. The winners are going to overcome my losers if you keep them small. But if you get greedy, guys, if you get hard-headed and you don't cut these losers quick, you'll lose a whole month's of profit. I've seen it happen. I've seen people, new traders work for a month, grow their account by 1,000 to, start a $500 account and grow it up to $2,000 in a month or whatever. And they're finally happy because they're just starting to get it to, decent size, because trading with a $200, $500 account is hard. And you can only take 1 or 2 contracts. And they're happy because they're finally at this $2,000, and now they can start taking more positions, more size to make more money. And then now they have a cash account. Now they're starting to be able to break it up into $500 trades, and they can make more trades, and it's just making things way easier. But then what happens? They take a trade, it goes against them. Instead of cutting it for a $50 or $100 loss, or whatever the case may be, $200, what do? They let it run against them, and they literally let it take away all their gains, and they're back down to $500. And they're sitting there after like, why didn't I just cut it? Why didn't I just cut it? And it'll tear you up. You can always refund your account. You may have to go back to work and stuff like that and save up, but you'll always be able to refund your account. But I'll tell you this, guys, something you can't get back is your mental capacity. If you keep making mistakes and you don't listen to your gut, and you don't cut losses quick, and you get hard-headed, you will drain your mental capacity, and you will really it'll drain you and make you think that you don't have a chance in this. And that's a bad mindset to get. You know, I mean, just cut the losses, guys. It can be hard. Just cut them. Don't let them get out of hand. Have a plan. Just cut them. So, here it is again. What do you see? Wedge pattern. My favorite setup. These are my favorite go-to setups. I like taking longs with ascending triangles. They look like this, except they're going up. Same triangle, except it's an ascending triangle instead of descending. But these short plays are my favorite. I like breakdowns better because when stuff breaks down and breaks support, they usually break it and go. You know, with breakouts, you get a lot of fake outs, and they'll break out a little bit and come back down. So I don't really care for it that much, but let's see. Where I'm looking at what the other trades were today. Amazon. Oh, Google. So Google was another one. Do you see the trade, guys? Where's the trade? Well, I'll tell you, the one that we did rock call was this one right here. But where do you see another one at that you could have traded? Right here. This one, you know, it sort of started to form a little support, but that's not quite big enough for me. But this would have been a perfect one for me. You know, even though that wasn't where it was called out, this is the one that was called out. You know, see that? Perfect bear flag. Break of the bear flag. Bam. Beautiful trade. I mean, I care about y'all guys. I want to see y'all succeed. That's why I'm doing this. I love helping traders because I was once in your footsteps. You know, I know what it's like to want to be able to get this down, and it's a great feeling to be able to do this. You know, it's a privilege to be able to sit at home and trade for a living. And I know that y'all, I'm absolutely 100% sure and believe in you guys that y'all can do this. If you follow what we teach you, wait for these setups and don't trade until you see your setups. And cut your losses quickly. You 100% will win in this game, because I promise you, if you wait for these good setups that we're teaching y'all, you're gonna have anywhere from a 70 to 80% win rate. You know, whenever I'm on point, following my rules, waiting for my setups, my win rate is around 70-80%. And if you keep your profit loss ratio, which is one of the most important things, if you keep your profit loss ratios, you know, manageable, then you're going to have a 2-to-1 profit loss ratio. Your profits are going to be twice as large as your losers, and you're going to make money. You know, you can make awesome money if you have a 50%. You can make money if you have a 40% win rate. You're only right 40% of the time. You're wrong 60% of the time, but your average winner is twice as big as your average loser. Like, I know that sounds crazy, but let's say you take 100 trades and you're right on 40 of them. 40 of them, you make 40 of them, let's see, 40 of them, you make $400 a piece. So 40 times 400. So you made $16,000 profit. On 60 of them, you lose only 200. So 60 times 200 is 1,200. Hold on. Did I do that right? 40 of them, you take 40 trades. I mean, you take 100 trades. 40 of them, you win $400 on every trade. 60 of them, you lose $200. So you still come out with 16,000 minus $12,000. You still come out with $4,000 profit. So you can still make crazy good money even if you're 40% right, only right 40% of the time, as long as you keep your average winner your average loser twice as small as your average winner. Profit loss ratio of 2 to 1. So let's imagine if you do that with a 70% win rate or 80% win rate, then you're going to make crazy good money, guys. So that's what it's all about. Your profit loss ratio is the biggest and most important thing. I promise this, if you trade, this is going to come, your win rate is just going to come with being patient, waiting for these setups. I promise you, if you wait for the setups that we teach you, you're going to have over 50% win rate. You're going to have closer to 60% win rate. And then when you get even better, you're going to be in the 70s and 80% win rate. I promise you. And the thing that's up to you is the profit loss ratio to when you do have those 30% or whatever wrong, that you can stop out. So where your winners are twice as big as your losers. You know, that's what's important, because when you're new, you're obviously not going to have as good a win rate as someone who's been trading for longer. So you want to make sure your profit, because when you're new, you're obviously, if you wait for these setups, you know, I think you'll have a good win expectancy. But obviously when you're new, you're going to make more bad trades than better traders. So you're not going to have quite as good a win rate. But something that you can control no matter what, that doesn't have anything to do with skill, because picking winning trades has a little bit to do with skill, but something that you control that doesn't is cutting losses quick. That doesn't have anything to do with skill. It's hard though. You have to not get hard-headed, but that's something you can control, and you can control that. And if you cut your losses quick, you can still make money even with a 50% win rate. So, all right, guys, I don't want to make this video too long. Those are just some trades I went over. I'm going to start doing this every day. Like I said, they're not going to be super in-depth. I'm just going to go over the main trades we went over that day, show you what we saw, just to help these newer guys get an idea of why we took the trade, what we saw, and that's it. It's you know, it's not necessarily a whole rundown of how to trade the strategy and stuff like that. We're going to get into that. We do that on the weekends, stuff like that. And you learn, and plus you learn that also all day when we're on the webinar live. So that's it, guys. I hope you enjoy. I'm gonna post this in the live trade live trade recap tab on the Ramp Up live screen share. I will post this. So y'all take it easy, and I'll see y'all in the morning. Peace.